Okay guys, this video is about teaching you how to look at economic things. Okay, so all of you should know that yesterday night, 30th of November, the market actually rallied like crazy, right? Because of what Jerome Powell say. Okay, so like what I have told you guys many times and even to myself, right? This type of events, nobody know what will happen. So it's best not to enter anything, right? But I did a small mistake. I entered a small swing before the event, and then it spiked all the way, which forced me to cut loss, which is okay, not a very big loss to me, okay, but something that we can learn from this. So I actually took the entire morning today, right, to actually look at what happened from June up till today with all the economic events. So I can just label for you guys. So this video is super important. Okay, I can just label for you guys. There are three type of important events. Number one is called CPI. Okay, inflation data, published usually once a month. Number two will be called FOMC, basically your Fed interest rate, also once a month. And number three, which is called random speeches, right? So you can see that yesterday was one of the random speeches. Why? Because that is not the CPI nor the FOMC, right? It's just Jerome Powell. He's coming out to talk. I also don't know what is he going to talk about, things like that. But the market will definitely react to it. So I have actually categorized into these three things. Okay, to repeat again: number one, CPI; number two, FOMC; and number three, none of the above two, right? Basically random speech. Okay, so I have compiled a list here, which it took me a few hours to really look through everything. Okay, I'm just going to share a few so that you learn out of this. Okay, so if you need me to send the slides or compile into a presentation, let me know in the comments, right? But okay, first thing first, I will be going through the CPI. So I have actually looked at all the CPI, okay, from the start, which is called 10 June, okay, about June up to today. So you can see that the CPI, okay, on 10 June, there was a gap down. After that, the first candle went lower. The next, these are all 5 minute charts, by the way. I'm all using 5 minute charts, right? It actually went lower, right? And then consolidated for a while, and the whole night it dropped a little bit and sideways. And the next few days, the next day it actually dropped below. So I actually noted here, right, what happened, the date, huge gap down, open and went lower. So on previous day it dropped 3 days before the CPI, right? Next day it gapped down and went lower, so on and so forth, right? This was on 10 June. If you take a look at 13 July, the next month one, same thing happened. Can you see that the about 2-3 days before it started to drop, and then on the CPI there's a gap down. So do take note that any CPI will have a gap, because CPI is always pre-market at 8:30. So when you see it, there will definitely be a gap, right? So in this case, the stock actually pushed gap down, and then make a new low. That was the all-time low back then, right? And then it actually recovered, went down and went higher, but the next day it gapped down, right? So it's very hard to catch them, okay? But later on I can tell one common thing that I observed, okay? Third one, 10 August, same thing. Do you see that before the CPI, the market was dropping for the past 2 days? And then the CPI was good. It pumped up, right? Went sideways, break the high of day and went slightly higher. Next day went higher. The overall trend for the next 3 days were even higher, right? That was in August. September, same thing, right? This time round, that's a little bit weird. Why? Because usually before CPI, we should see the market dropping, right? But this time round, the CPI was here, the market was rallying before that, and then it gapped down and opened, right? Consolidated for about 20 minutes. You can see about 4 or 5 candles push low, and the whole night it was just dropping lower. Next day drop even lower, next day drop even lower, right? So this was the CPI in September. October, same thing. Not this was our market bottom, right? On that day, I said that high chance there's a possibility that this is the bottom. 13 October, if you guys still recall, right? So you can see the pattern is the same. A few days before the CPI, the market usually drops. So in the event that a few days before it rise, you are guaranteed that it will drop back, right? So if it dropped first, there's a chance that it might rise back later. So on this day, 13 October, same thing, you see a huge gap down, right? And then it was very, very red in pre-market, open market. The first 2-3 candle already pushed, right? So basically from CPI, I can just share with you, right? If you take a look at this is November, which is the most recent one. Same thing. Do you see the CPI is here? A few days before, it has been dropping already, right? Dropping to the CPI and the CPI gap up. That was the day that I believe, if you remember, I actually so-called missed my flight just because I want to trade this, right? And then the whole market rallied the whole night, right? And the next day and the next few days. So you can see what happened here, gap up, push down lower, 1, 2, 3 candle, break high of day, started to went higher, right? There's a very obvious trend here. So for CPI up till today, I can just summarize for you. Okay, a few days before the CPI, market should drop. And if it doesn't, and it rise, you are guaranteed that it will drop. Okay. Number two, even if a few days before it drop, it might go up or go down. Nobody will know. Okay, but what we want to look at is the first 30 minutes of the market open. Usually at about 10 p.m. That means 9:30 to 10. That will be the real direction, right? Which we can see. If 9:30 to 10 it rise, usually it should be rising the whole night, right? Same thing, if 9:30 to 10 it drop, it should be dropping the whole night, right? Same thing for here, 9:30 to 10 sideways, then probably the whole night is sideways, right? This as well, right? Drop sideways and the whole day it went slightly higher, but next day suddenly gap down. So this is for the CPI. Okay, do take note. There are a few. Number two would be called your FOMC, right? This is a very important one for me as well. Okay, so FOMC is basically telling us how much are the Feds putting their interest rate, right? Is it 0.5, 0.75, so on and so forth. This is the second most important thing, okay? And I have done it from same thing, June to today. So the FOMC is a little bit different from the CPI. Okay, what's the main difference? CPI is always pre-market. FOMC is always at 2 a.m., right? 2 a.m. Singapore time, usually, if it's not so-called your daylight saving. So you can see that this is what we commonly know as the initial move, the fake move, right? Which at the market open, right, it will just be sideways because nobody want to trade, because nobody know what will happen later. So 2 a.m., sorry, is always the fake move. You can see that the cursor here, all the dots are where the announcement happened, right? It usually plunge for about 30 minutes and then push higher. 27 July, same thing, 2 a.m., it actually dropped and then push higher at so-called 2:30, right? The only weird one was about last month, 2 months ago, at 2 o'clock, it actually dropped the FOMC, and then at 2:30, as expected, it recovered, and then suddenly at 3 o'clock, it flushed down all the way, right? That was a very, very shocking one to me, because most of the time they don't do that, right? And then in November, which was, I think, if you recall, just a few weeks ago, right? Same thing, the initial move is the fake one. Can you see that at 2 a.m. it rise? Therefore, at 2:30, they usually will reverse, which is no doubt that is what happened. Right, next day go sideways, very normal. So for FOMC, I can tell you that it is true of the initial move. Right, the first 30 minutes is usually fake for FOMC. So what was yesterday? Yesterday on 30 November was not a FOMC, also not a CPI. So that is the one that is the hardest to catch, right? It took me a long time. I have actually looked at when did this Jerome Powell speak, ever since July till now, right? The non-CPI or FOMC dates. You can see that, for example, this is a 26 August Jackson Hole event, right? He was speaking at 10 p.m., which is here, right? The market actually dropped and rise one candle and flush down all the way. It dropped a lot. If you take a look, this is 420, it dropped to almost 406, which means the market dropped almost 4%, which is very, very red, right? So he speaks at 10 p.m. at this incident. On the other hand, right, you can see that this is also a so-called CPI or FOMC. He spoke at the market open, and then the market actually rallied, and then the whole night it went higher, suddenly reversed, right, and then go sideways, so on and so forth. 23rd September, also another non-event, right? He spoke at 2 a.m. Right, this time round is a little bit different from the previous two. You can see that the previous two was at early market, either at the start of the market, 9:30, or at 10 p.m. also at the start of the market, right? And this time round it was at 2 a.m. right? And no, you can't catch it. I believe the stock started to drop at 2 a.m. and then at 3 a.m. suddenly reversed up again, right? And what happened here is 28th September, also another weird timing, right? At 10 o'clock, 10:15 exactly, right? He started to speak, and then the market rallied all the way the whole night. And then tomorrow we have a gap down and push back lower, closing way below where he talked, right? It returns all the gain. So if you take a look at the SPY yesterday night, what is happening, okay, is like what I said, right? Do not enter any position for swings or whatnot if you have an event. So that was my mistake, and definitely we will learn from it. Okay, it's just a small loss for me, but yeah, you can see how crazy the stock actually pumped right from this. So uh, once again, this is what we call your third category, right? It does not belong to CPI nor the FOMC, right? This is just one of the random features from him. So, right, the stock actually broke and then flew higher. To me, I actually cut loss here, right? When it started to break this, I decided to cut, and the stock actually went higher, right? So now, the thing is, what we can learn from this is, from now on, right, whenever you see that there's an important event, aka the three of them, go and classify what three, which one is it exactly, right? Is it a CPI, a FOMC, or just a random speech? So if the hardest to me is called the random speech lah, because if it's a random speech, I actually don't see any pattern, right? I don't see any nice pattern at all, except I would say that you should take about 1 hour to see the trend. That would be better, not 30 minutes, but 1 hour. So for example, if you speak at 10 p.m. and you look at where is 11 p.m., right? That should be the real direction. It should go down lower, right? Same thing. At 9:30 he's speaking. You should see at 10:30, which is here, right? It should go higher, right? It actually went higher a little bit, suddenly plunge, right? Also not sure why, and then it recovered a little bit. Next day went higher. So same thing here, also hard to say, right? When 2 a.m. it dropped up to 3 a.m., you will think that it should drop lower, suddenly it reversed, right? So it's not very, very accurate as well, right? I actually don't see a pattern here for the random speech. Same thing, right? If you say that this is 1 hour, also possible, right? 10 o'clock to 11, it is rising. It should be more of rising, which it did, right? But nobody know what happened tomorrow, why it gapped down and pushed back way lower, right? So to summarize, I think that the CPI is very easy to see, right? Usually it will drop before that, and the real move happened on the CPI. FOMC also okay, right? It's called the 30-minute fake rule, but the hardest will be called this green color portion. I have actually labeled them. You can see red color is CPI, blue is FOMC, and green are all for the random events, right? Random, I don't know what is he going to speak, like yesterday. So this is much harder to catch. But I would say for your own safety, like what I said, try not to enter anything, all right? But just react to it. If you want to react to it, I'll say that react to it after 45 minutes to 1 hour. That should be better, right? Like what happened yesterday when it came out, it was 1:30, right? 1:30 on US timing, 2:30 Singapore, right? At about 1 hour later, which is around here, 2:30, you can already react to it. I believe that the move is up. I don't think it will crash, right? So that's what I said in the group chat yesterday. I don't think that the market will actually crash back. The worst is called sideways or it might even go higher, which it did. So what I actually did was, for those of you who were awake, right, I actually cut loss, which I posted there, right, and I actually went in long position on a few stocks for day trading, and I actually made it all back easily. Okay, but what I want to share with you here is, do take note that as of today, right, I'm talking about market now, I'm not talking about yesterday. As of today, I really don't know what will the market do, right? In my opinion, it can do anything, okay, because as of today, the market is actually at the key level of our yearly or 1 year trend line. Look at this area. This is January. I believe you can draw this easily, right? As of today, the S&P is here today, right? I do not know if we will break. Even if we break, it might be a forced breakout, right? Or it might just reject and come back down. So keep eyes on it, right? To me, I am not very sure what will happen. I am still waiting to react, but I believe if we can, the safest way, in my opinion, is called break, come back for a retest, bounce off. This will start a rally in December, which is what I actually explained also, right? So at the start of this week, Cyber Monday, I told you guys that, most likely the market will drop for 2 3 days and then recover higher, which actually happened, right? Which actually happened. Monday, Tuesday, Wednesday drop. Wednesday midnight, which was yesterday, it recovered all the way, right? So which is why you want to buy investment on red days and stuff like that. Okay, so yeah, just be very very careful. Keep this video, okay, keep this video with you. Make sure that you look at it whenever there's an economic events, so that you can actually look at past data to help you better. Yeah.